Welcome to LeonCo, and on this week's video we are discussing investing, but specifically we want to discuss a very specific topic about risk. What risk do you have and what risk can you face at the moment when it comes to investing? Well, reality is at the very first moment that you start investing, that you take money from your wallet, from your bank account, from your pocket and invest it in something, you're having risk. The only investing that can be guaranteed is when you invest in yourself. If you invest money, if you invest time, if you invest in experience in yourself, you can have a surefire return because you have control of the return that you want to have on that investment. Other than yourself, investing is something that involves a lot of risk. You can invest in the stock market, you can invest in real estate, you can invest in companies, you can invest in starting your own company, and you will always have a risk. Investing comes with risk involved. It is a reality. Some people have this fictional bubble around investing that believe that if you start investing, you will always have a return, you will always have your money guaranteed, you will be making lots and lots of money. And the reality is that there is always a risk factor that you should take in mind and take in account at the moment that you start investing, because there are so many factors that could change your investing and that can affect the money that you've put in certain types of investing, that can affect the money that you have and the money that you can eventually make. So let's give some examples. For example, if you put in your money in the stock market, if you start buying stocks from different companies, you should always be aware that at the moment that you buy a stock, that is the price is by supply and demand. If there is a little supply of the stock, the price is supposed to be higher. But if there is lots of supply of the stock, maybe the price is a little bit lower. It comes with offer and demand. If lots of people want the stock will be in a higher price. And if not many people want the stock, well, the stock will eventually be in a very low price. This affects a lot when it comes to the stock market, because you may think that you're putting your money in good stocks, in good companies, but if other people don't see it that way, instead of making money, you could be losing money or not making money at all. And there are other circumstances, there are other factors that can affect your money in the stock market. For example, if there is an economic crisis, if there is a financial breakdown or a shutdown in the system, where countries, maybe in the United States, like it happened in the late 2000s, when economic crash caused the stock market to crash bottom and lots of people lost their money. This could be a reality. This is a risk that you face at the moment that you start investing. Another example is when you go to real estate. Lots of people believe when you buy real estate, most properties should go up in price, and not necessarily this is the case. Some properties even go down the price that you first started paying for that. For example, if you bought a house for $100,000, maybe in a couple of years that house can be an $80,000, maybe $90,000. So you lost equity, you lost $10,000 instead of making equity from the house being $120,000, $130,000. This is a reality that most baby boomers faced when they started buying real estate, when they started buying properties. Baby boomers, lots of them thought that if they bought houses, bought properties, they will eventually get lots of money in return. But in the late 2000s, when the market crashed, especially in the real estate part, lots and lots of people lost money and the real estate lost value. And this is a reality that you can face. There are a lot of risk involving when it comes to investing, and people don't necessarily talk about this, the part of risk. But if any investing that you do in any area, there is some factor or risk involved. The most important thing is and our best advice is, at the moment that you decide to take money out of your pocket, out of your wallet, out of your bank account, always be conscious about the risks that involve in that specific type of investing that you want to do. If it's something that you're comfortable with that risk, is it something that you're willing to tolerate that risk, and you are willing to pay for that risk that you're doing, you should go for it. You should go 100% for it. But if you have doubts and you're not really sure about that type of investing, then you should consider other areas in investing. This is something very important, and this is the best advice that we can give you when it comes to risk tolerance and when it comes to risk. So I hope you guys like this video. Give us a like, subscribe to our channel, leave us a comment down below on what you guys think about this video, and if it's helpful, hit that notification bell so you can get a new video every time we put a video on our channel. Follow us in our other social media, but always remember to have that king mentality.